Welcome everybody to the number one chart of the day off our trading desk, coming at you live almost every day of the week. Maybe we don't do it Fridays. At 4:05, I like to share with you what we're doing on our live desk during the day. Number one trade on the desk, so to speak. 7 o'clock Sunday night, we do our weekend review. I'll go over all of these charts. Stocks to watch on our desk, stocks to buy on our desk, stocks that are in focus, helping us decide which direction the market's headed. All those things we go over 7 p.m. Eastern time on Sunday night. But right now, what I want to share with you is how to trade the equity indexes on a daily basis. And what I like to say we do is we smart trade, we don't day trade. So I'm going to share with you what happened yesterday and today. One day where we put on positions and made a lot of money, and today where we didn't put a share to work and we stayed away from a chop day. Both are equally important. The bonus today is I'm going to show you one indicator and a technique that we use called Avg True Range and how important it is to determining if we're in a chop day or a trend day. You want to trade the trend days. You want to avoid the chop days. So let's dive in. Don't forget, if you enjoy this conversation, you can always subscribe to this YouTube channel. Go ahead and share this with friends who you think will find this useful. Put your comments in the comment section. Even if you are watching this later tonight, I'm happy to answer any questions after I go through this for you. So go ahead and do that. So what we do here at what I like to call a virtual hedge fund, that's what we're running. We have a live trading desk. We have ARMR insiders that join us all day on the desk and trade with us. And we break our capital up into three categories. So our hedge fund breaks down into three categories: day trading the equity indexes only, swing trading, and investing. And we follow three different disciplines, and the blended approach is what really creates the alpha for us. So today we're talking about day trading. All I do in that portfolio, third of my capital, personally, all I do is trade the S&P with an occasional triple Q trade thrown in there. Now, what I'm going to share with you works for me and my risk tolerance. By joining me on the desk right now, this virtual hedge fund, you're a portfolio manager. You've got your allocation. You got to figure out your own risk tolerance, your own goals, and see how this information works for you and how you can put it to work and make money. That's up to you. I'm going to share with you how I do it. Okay. So when trading the equity indexes, I like to trade triple the S&P. That's SPXL. When trading the NASDAQ 100, QQQ, I like to trade triple the Qs, TQQQ. This may sound aggressive to you, but please understand, this is my safe money. It sits in cash every night. I have no overnight risk. Some days I don't even trade, like today, because I avoid the chop days. I only put this capital to work when probabilities are at their highest and the reward is worth risk based on an algorithm we use that we share with our live desk all day, okay? If I don't have that set up, I don't put the money to work. So in essence, it's a very conservative strategy, spending a lot of time in cash, and then I find a window of opportunity, probability is high, reward worth risk, put capital to work. And so I use triple the performance to give me the performance of a strategy that sits in cash every night. And this really works for me. The underlying benefit that I don't think someone would see right away. Obviously, there's alpha in I'm going to show you in a minute how to do this, in capturing alpha on days when we can. But the real added benefit, maybe not so easy to see, is that it makes it easier for me to execute the strategy in my swing and my investing portfolios, because I know I have that cash cushion every night. And then we put it to work on days like I'm about to show you, and the whole portfolio goes up 1%. Then we go back to cash and we wait for our next opportunity. So the equity curve is like this with very little draw. That's how we run our day trading capital. Let me show you this number one chart of the day off our desk. You're looking right now at a 3-minute bar chart. I'm going to open it up for you so you can see it clearly. This is a 3-minute bar chart of the S&P. So we're going to look at the S&P today, but when I show you S&P entries, I'm buying SPXL. So I get triple the performance. Okay. So there's 2 days you're looking at here. Every day, every bar is 3 minutes. The bars that are blue are up bars, the red bars are down bars, magenta. The black dots are the VWAP, volume weighted average price. We have standard deviations 1, 2, and 3 above and below VWAP. We have Fibonacci extensions above and below the opening range. That's how we set up our day. Now, what I'm going to highlight for you is this blue line here, where you have all these green arrows and where you have these red arrows. This is the average true range. This blue line here, okay? It's the average true range of high and the average true range low. What does that mean? It means on average, the S&P, when it hits that average true range high, that's as much as you normally get on the S&P that day. It's the average over X amount. Now here's the rub. This is an ARMR algorithm. We took off the shelf basic average true range. You can find it in TradeStation. You can find it in Thinkorswim or any charting software you're using. And what we've done is we've infused it with top day and multi-day volatility. And so it changes the average true range and it makes it walk up or down depending on behavior of the top day and multi-day. And that's what I guess you would call the secret sauce of average true range information that I'm sharing with you and what I share with traders all day who are joining me on the desk. Okay. So when you see the ATR stair-stepping higher, that is a day you want to look long the market. Okay. You want to look for whatever your buy triggers are. You want to do it on days where the ATR low of the day is stair-stepping higher. It's showing you the strength of the trend. It's a trend following day. Today is an example of a day where we don't trade. We don't put any trades on in the market today. And the reason is the ATR high is stair-stepping down while the ATR low is stair-stepping up. And that's telling us it's a chop day. It's just going like this. And we knew that very early this morning, and we just haven't traded all day. We smart trade on the desk. We don't day trade. You call it day trading and you feel this impulse to trade. You shouldn't be doing that. Figure out the strategy that works for you and just execute that strategy, right? And then you bank out on days like this. These are the days where you really bank out. Okay? So yesterday was our big up day for the week. We captured about 1%. The whole portfolio is up 1%, right? So our day trading trigger shows up in the first 4 bars of the morning. And so we got long yesterday at 9:42 in the morning. This is a classic ARMR day trading playbook setup where we're testing prior day's VWAP, these black dots, and we hold and reverse. We get long. These red lines are the stops we're using. So when we get long at 9:42, the stop is this red line. Once the asset makes new highs, the stop goes to the low of that tail. When the asset makes new highs, the stop goes to the low of the consolidation. Stock goes to new highs and it hits our primary target, which is the average true range high of the day. The ATR high of the day. We book a profit here. We raise our stop to the low of the bar that hits the ATR, and we get taken out right there. So that first trade in the morning, we booked a solid profit. Don't forget, it's triple the performance of the S&P. So we had a big day. That's a big day for us. But watch how the market holds the ATR for almost 2 hours. This is, what is this? 11:45. And it gives us a risk on entry point again at 2 o'clock. So it hovers around the average true range high of the day for a long time. And then on our trading desk, we have certain times a day that we like to trade. 11:30 is always key. And 2 to 3 o'clock, that's when the afternoon trade sets up. So we'll always look to take a trade between 2 and 3. And so right here, we got the follow-on buy signal. We see the ATR pushing up all day, and we captured a little bit more. This ran right to the next Fibonacci extension. We booked a profit there, raised our stop to the bar that hits the extension, and we get taken out right there, and we capture the day. Now, if you look over here, you'll see this green box. Okay, this is for somebody who wanted to trade on a day where I won't trade. This is a chop day. But I do share this in the room with ARMR insiders who are trading with me. So if you're just a day trader and that's all you do and you don't have any other risk in your portfolio, there's the entry point today. And look at the time, 2:30. It's the 2:30 entry. And we traded from here, one standard deviation below the VWAP, and our target was 1 standard deviation above the VWAP, and that's where we booked our profit, and that's all there was on that day. This is how you day trade the indexes. So tonight, go ahead and do some homework, do some research, go on and chat GPT it, and look at what average true range is, how to calculate it, how to use it in your own strategy. If you'd like, you can always join us on this desk. You can subscribe to the YouTube channel, but also you can subscribe if you wish to the ARMR Investing Way and become part of our virtual hedge fund experience. What we're doing right now is a 5-day free trial, so you can see how we do this. Literally each day, I walk you through step by step how we're trading. You may want to join us. I hope you guys have a great night. I look forward to seeing you tomorrow. Take care, everybody.